There's something really strange going on with this volume. Take a look at this. You see this wick? And then if you look down here in the volume down along the bottom here, you'll see every now and then you'll see a wick. I've never seen wicks on volume. I mean, volume is volume. It prints. It's a solid bar. The highest the volume is the height of the bar, and it's printed, and it's not adjusted in retrospect. So I don't understand these wicks, but you can watch this bar change. Obviously, price has moved forward. The timing of it is 13:20, so this is basically 13:22:59, and this is 21:42. It looks like I could go back and confirm that, but it's basically a second in the rearview mirror. Is that correct? 51:52. Yeah, it looks like it's 1 second is passed, and then it's like the volume is adjusted retroactively, like volume is assigned to this turning point low. So I'm going to back the video up. I'm going to skip back in time in the video, so you can see the 35,000 sort of share high water mark sitting here, and come across here. So obviously that's a little bit above that. So now you have a solid bar. So you have a solid bar here. I skip forward, and there's a solid bar with a wick. That's the same turning point. Solid there, solid there, solid there. So here's the wick again. You can see the top of the wick is above the 35,000 mark, and the body of that bar is, call it 20,000 shares, something like that. It's in between the 15 and the 25. Skip forward a frame, you can still see the wick. Now it's solid and well above 35,000. I'll show you the actual print. Found it in one of the screenshots. Maybe I'm going to have to let this video run instead of doing a screenshot. I'm going to have to let the video run. Let the video run, and then we'll pause it through that turning point. So this was the news. This was the, whatever, the judge's release of the news. And you can see AMC in a kind of a semi-free fall here from, call it $6 down to $5 in about 3 minutes. So a dollar drop in about 3 minutes after hours, obviously. Right around 121. So I'm gonna play this and then keep an eye over here. I'll try to pause it. You'll see there are 2 trades that came through from ArcX, and I'll try to pause this. Oh, it's not going to run for me now. I don't know why that video doesn't want to run. All right, let me try to skip forward. Well, I was able to play the video a minute ago, and you could clearly see the trades. It's interesting because it's almost like a bunch of 100 lots front run the two big order sizes. So I'll back that up again. Well, we just saw that. Now I can't get the same screenshot up. You just saw all the green and all the 100 lots that we're trading into the low. Now you can see the sharp reversal here off of that volume bar that came during that flat line. So we just saw it on the video I'm capturing now that there were a bunch of 100 share blocks that sort of were front running these two other, it was like a 20,000 share and a 38,000 share order, from what I remember. There's your wick again. So here you're still dropping into the turning point low. There's 505. There's your volume spike. You can see well over 35,000. Here it is right here. You see this? So you had at 121 and 43. Both trades ARCX, 20,000 share block, or 20,000 shares, and 42,645. But you see all these 100 share trades that come in front of that order during that flat line. And then you have the big turning point volume, again, well over 35,000, because obviously it's 42,000, 42,645, and 20,000 plus, all this stuff in here that's happening at that 121, 40 and 43 seconds bar. So I don't know why it moves from a solid bar, and it saw the volume. We see the volume right here, so we know that's what the bar is supposed to look like. Then it has a wick. It kind of looks like a 20,000 share, which we know is not correct. Still has the wick, but clearly that put in the turning point low. The stock has rallied 50 cents in 1 minute. And again, you look back and it appears that there were only 20,000 shares executed. I mean, I really don't know what the wick's about. I've never paid close attention to after hours, but I've never heard of a wick in volume. Maybe you guys have. It doesn't make any sense. Volume's volume. You shouldn't be adjusting it retroactively, right? In other words, if you're executing size that's large enough to turn a market, to create this turning point low right here, then a minute later, you can't retroactively strip the volume back out of that bar and say, no, just kidding. We really didn't trade that size there. I don't know what. Okay, look at here. Look at all these wicks. I mean, you don't see that during the day session, so I don't know what they're doing after hours. Then you had your sharp move up. Then here you come back down again. They're going back and forth with trying to figure out how to interpret the letter that Judge Zern released. Now, I started this video because I'm trying to capture some data for, look at that. Look at that. So you see this flat line right here? That flat line at 536 is all of these 100 share. Well, there's some 950s scattered in there too, but all of these hundreds, 950, it's a 385, that's odd. 950, 950, 950, 950, 950, 950. So let's see what they're doing here. They're going 950, and then they're doing 200 share trades, doing 950, 200 share trades, 950, 200 share trades, 950, 200 share trades, 950, 1, 2, 300 share trades, 950, 1, 200 share trades, 950, 1, 2, all ARCX, which has an interesting past of basically crashing the entire Nasdaq for 3 hours, and is heavily involved in options and stocks. That's interesting though. That's I would say that's clearly an algorithm, right? Because it's 132 and 7 seconds. So all of those trades are 132 and 7 seconds. So they're happening, simultaneously, the blink of an eye. And again, it's 100, 100, 950, 100, 100, 950, 100, 100, 950, 100, 100, 950, 100, 100, 950, 100, 100, 100. I don't know if that's any messaging behind that. Inserting the 300 share trades in there, then you go back to 950, 100, 100, 950, 100, 100, 950, 100, 100, 100, and it ends. Trying to see if it turned the stock up or down. Basically, it's flatlining. You can see up here where all of it went off right there. It's like they were trying to turn it. Okay, so now here's the out of sequence trades. Let's see when these start. You can see the white, highlighted white lines. That's interesting. Oh, this is when TradeStation dropped my connection. Again, I'm scrolling within a video that I made today. I made a video from 1 a.m. into the open, and then I made another one after hours. So here you go. This is all right, let's take a look at when the out of sequence trades start. Here's 136. There you go. So here's 136. You don't see any out of sequence trades over here. I skip forward to 137. So it happens sometime between 136 and 137. skipping forward, this is when I first see these, but now you're seeing these out of sequence trades show up. So, market closes at 1 o'clock my time. This is 37 minutes and 31 seconds into the after hours trading. And we start to see these out of sequence trades. The out of sequence trades are, let me see if I can pull this up for you guys. Here's your definition of your out of sequence trades. It's pretty complicated, but basically a transaction that printed late may include the following types of transactions: cash only, market, average price trade, next day only, market, and sold. This next day only, is interesting to me because, again, if you can take a trade, and maybe it's not even a dark pool trade, but it's a lit exchange trade from the day before, and you can claim that it was out of sequence. In other words, you can't assign a timestamp to the trading activity for whatever reason. And I'm sure, like a lot of these other rules, they were probably set up with, or possibly set up with good intentions. How do you handle a trade that, something goes wonky in a system and they don't know exactly where to apply it? So what they've decided is to carry it into the aftermarket, apply the volume, my understanding, at least, you guys correct me if I'm wrong, apply the volume from the out of sequence trade to the closing volume of that entire day's volume in the final closing daily volume bar, but yet not assign the actual trade to any price level or any time during the day. So basically you lose, whether it was supply or demand, you lose the ability to help with price discovery and drive price either up or down by posting the trade during the time of the bar, the intra bar, the time stamp that it was placed, and assigning the volume to that period during the lit exchange day session activity. So if you carry that as an out of sequence to after the close, it pumps the volume up for the entire day. I mean, it reflects the proper volume, but you've completely lost price discovery in it. And if you wanted to do it, in a nefarious way, obviously, you could strip buying power, buying pressure, demand out of the day session and bleed it over into the after hours, and you've completely changed the dynamic of the trading day. So it gets a little complicated when you read through all of the nuances, but the best of my understanding is that again, these are trades that they can't assign a timestamp to, so they go ahead and carry them into after hours. Well, it's odd to me that, obviously, if you so obviously we know that based on the close that AMC was trading up here around $6. So we know that at no point from the close of the day session until right now, when we're starting to see these out of sequence trades post, at no time during that trading activity was price trading at $6.50 or $7. And what you're going to see in all these out of sequence trades is out of sequence above, and obviously you can see, price is trading at $5.30. See $5.29, $5.30, and all of a sudden you see these, number one, you see these bizarre $6.50 odd lots 1 share, 10 shares, 30 shares, 52 shares, all of them in the 650 range when price is trading 529 in real time as we're watching it. And then obviously the out of sequence had to be carried from either this day session or even a prior session. I don't know if they can, you know, pull an out of sequence trade forward 2 full sessions, but at least during the trading session. So if we take a look at, see how am I going to do this? If we take a look at is this my live screen? Yes, this is. If we take a look at the trading activity, we were only trading 623 right here. So in order to be printing 650, you basically have to go all the way back to about 3:20 a.m. my time on the 24th. And then, you know, there's several periods here between, you know, Friday the 21st trading activity. And here's where Friday closes, right there. So there. So here are a bunch of the trades up into the 7s, and then on early in the morning, this morning on the 24th, you can see we're back in the $6.50, $7 range. The highest we printed was $7.60. So now we know that none of the out of sequence trades occurred after hours today. They had to have occurred either Friday after the market closed or this morning from 1 my time, West Coast, 1 a.m. forward. And really even in today's session, it would have had to have been even right out of the gate, they slammed the stock. So really 1:30 in the morning through 3:45, you're trading in the 650 and higher range. Then you're not, so they couldn't have pulled any of it here. So you know, the logical conclusion in my mind is that obviously as the stock was about to either continue higher on Friday afternoon or about to threaten the Friday after hours high into this rally after they slammed it 1 in the morning. You know, this is Friday's close, this is the open this morning, and they slammed it. And then right here, it looks to me like they basically just said, hey, we don't recognize all of this trading activity up in the 6.5 to 7 whatever range. Let's see, this traded as high as 760. So let's go and look at the out of sequence trades now and see if we see trades up to 760. If so, it looks to me like they were trying to strip demand, buying pressure out of the tape. You know, 2:20 in the morning, so 5:20 in the morning, New York. And then they stuffed it into the after hours trading today. And that's when you guys saw all that really strange trading activity. So here we are. Now this is the video recording that I took from after hours today. And then I'm going to just skip forward. And we're going to watch all these white blocks. These are all out of sequence trades. And then look at the price over here. And we're looking for prices that are all $6.50 to $7, which you can see already they are. So here's $6.70, $6.70, $6.70. 650. Now we're up to 680. And clearly, none of this could have happened after hours today. And even, let's see, it couldn't have even happened in the cash session, could have it? Let's see. I haven't had any sleep, you guys, so bear with me. So let's see what the cash session looks like. So here's cash session. Here's 6:30 in the morning, the open, so $5.86, and then here's the close right here. So the highest we traded today, yeah, see, this is, we all know what's going on, you guys. The highest we traded during the entire cash session today was right here, $6.23. So all of these out of sequence trades from 650 to 780, and we're gonna go dive in again and see if there's trades above 780. But even right here, I'm sorry, 680. All of those were done during the pre-market hours, either Friday after the close, and they were trying to strip away buying pressure and demand, or it happened today, pre-market. 690. I'm pretty sure I saw sevens in here. Let's see. Yeah, here we go. So here's 7. All of these white. And look at the volume. 115 shares, 100, 100, 500, 250, 125, 680 to 703. All buying pressure, stolen, stripped away. Think about what that would have done, could have done to options. $7.06, 690, 409, 266 shares, 108. $7.16, 110 shares, 161, 103. $7.28. $7.43. Look at this, you guys. Unbelievable. 748. $744. And now look at the volume. 900 shares, 875, 159, 900, 100, 161. I mean, this matters, especially if you held calls today and they suppress price like this. Look at this. 1,000 shares, $7.23. Let's see, is Nasdaq the Nasdaq? Look at it, you guys. Nasdaq. Look, you guys. Nasdaq. All of it is Nasdaq. Look at this. Look at this shit. Look at this shit. All of it Nasdaq so far. All of it Nasdaq. Unbelievable. Look at this shit. All Nasdaq. 100%. 100% Nasdaq. Well, this can't go on, you guys, not right in front of our faces like this. And where's the CEO? Where's the leader? Okay, so again, Here's what it looks like, and I'll have to go back after the video's done and look at the live video. It won't play right now for some reason. Only let me fast forward, skip forward like this. But basically, 136 is 137's the first out of sequence print that I see. Again, Nasdaq. I'm going to skip forward. Keep your eyes on the exchange. We already know the price ranges from 640 up to 748, I guess we said. But watch this column right here. It's all the out of sequence trades will be highlighted with a white background, and you're going to see all Nasdaq. And there's trades all over the place in different exchanges. This is 100% Nasdaq. So I'll hand this information off to a friend of mine who can tell me, drill down and sort of behind what's going on here and try to figure out the next couple layers and figure out who this is, because this is absolute highway robbery. Okay, so there's where it settles down. So it's 1:30, what we said, 1:36 or 1:37 in the afternoon, my time, West Coast PST. And then here's a 1:53.53, and that looks like that's when it ends. Now, keep in mind, any out of sequence trade, the volume will be reflected at the end of the day for the total volume that AMC traded today. But none of those trades, none of that price discovery, $6.40 all the way up to $7.48, none of that reflected, not during the day session hours and not in the aftermarket hours. That's why some of your platforms were so confused. In my platform, you never saw price jacking up and down in TradeStation. You never saw it thinking that those were valid prints, 650 to 748. They're recognized over here in time and sale as they should be under out of sequence, condition rather, not category, condition out of sequence, but it shouldn't be reflected over here like it was in your platforms. So, that drew extra attention to this whole thing. So again, 136, if you guys want to, some people have DM'd me and wanted to go take this to someone to look at. 136, so that's 4:36 p.m. New York time until I'm sleep deprived, you guys, sorry, until 4:53, call it 4:54. I'll skip forward really quickly here, but I think that's kind of wrapped up the majority of the out of sequence trades, if not all of them. And so now we're at 2:30 in the afternoon my time. We haven't seen any other out of sequence trades. Okay, that's it. So again, Nasdaq is the focus. We know the time frame, and we know that based on looking at the trading activity on the chart, that all of these trades had to have happened either Friday after hours or during a very short period of time today, during this bounce right here. Because again, this is You know, 623 is as high as we traded here. And so, you know, none of those 650 trades could have gone off there. 650 looks like that. So 650 had to have gone off either exactly right there, or sometime right here. And then all of those $7 trades, the 748, had to have happened. Damn it. You know, there's 748. So it's kind of interesting. This is where they would want to suppress this if it happened today, the 24th. Because again, this was Friday's close. They gutted us at the open, you know, 1 in the morning my time, and then this is where they would have been trying their best to suppress price and to manipulate it. So I'd be willing to bet all of those high 6s and 7s. Well, we know they had to have either happened, you know, right over here, or right here, and anything over 623 had to have happened right here in this price box. So just suppressing price as hard as they can to prevent a run through that Friday after hours high. So you guys do with that what you will. I'm going to pursue with the person I'm working with. I'm going to drill down into those Nasdaq out of sequence trades and try to figure out what lies behind those, literally, and then I will. I can't promise you I'll report some of this stuff publicly because we're working on some stuff behind the scenes, but I'll keep you posted on some of this stuff. That's it from my side. Really disappointing, but you know, that costs people, especially in the options market, real money. You know, especially if they have weekly calls, both from even if price moves back up there tomorrow, from a decay perspective and from lost opportunity. And who knows where we could have gone if we would have moved through that high. We could have run up to that Anemoi monthly trigger at $11.88. So that's it from my side. Good luck to everybody. Disappointing stuff, but at least I think we're getting closer to the truth.